Hello fellow traders, welcome to my channel. Today I would like to share a simple, low risk yet a powerful SPY options trading strategy. As most of you watching this video, you could be new to the investing world who is trying to understand how the market works, or actually maybe a person like me who invested in stock market and lost a lot of capital. Okay, well, then I started doing some research on how the market works, and I'm confident now that I found a good strategy that helps me to make a decent amount of money in the market. So I thought it would be a good idea to share my knowledge to as many people out there so that they can all make money off the market. So it is a very, I call it like low risk SPY options trading strategy. So what is the strategy? Well, buy SPY options at low risk levels and wait for a $1 move in SPY price, which will provide $0.50 per options contract, provided actually your option delta is like 0.5. So that means you will be making like $50 per contract. SPY is highly volatile, so the price will fluctuate intraday. You can capitalize on $1 moves. So again, the number of options you buy will depend on your risk appetite, size of your account. If you buy 10 contracts, you'll make $500. If you buy only 5 to $50. If you put more, well, I mean, more money too. So it's up to you totally. Please do watch the entire video. I have demonstrated the exact setup on how I trade using trading view charts at the end of the video. Okay, that's a big question. Why trading SPY options? There are like so many companies and so much options available. Yes. Why I chose SPY options? Because I'm not exposed to individual stocks and associated risks. So that's one of the reasons I chose SPY options. And also SPY tracks like S&P 500 performance. If individual stocks or sectors do badly, I can still make money by trading the overall market. Why I say it is a low risk strategy? Because I'm buying at oversold conditions and selling at overbought conditions, or somewhere in between. So like when you are at the oversold conditions, the most likelihood scenario is the market is going to go up. Then on the way up, depends on your risk levels, you can sell it and make decent amount of money, but you have to wait for that oversold conditions. I'm not exposed to the risk of poor business practices or fraud by individual companies and associated stock price changes. Just give you an example. I mean, like it's the most recent one. One of the pharmaceutical companies' much anticipated trial results were released early this month. Guess what? The results were really bad and the price plunged from $27 to $3 within a day. That's a huge loss, and people are trying to speculate. If you go on the stock boards, people were like boasting, I have this much amount of stock, and they are expecting to move. In the past, it has moved like all the way up to I think 130 or even I think more than that. So people thought actually that kind of appreciation, unfortunately, it went back. Well, are they going to totally like shut down the shop and move out of the business? I don't know, but you are the investor now actually holding bags. You have to wait for the things to happen. Well, which is not nice. The second one is actually like it is during early days of my trading, a company known as Valiant Pharmaceuticals. Well, it was a Wall Street darling, and it was going, I mean, around 250, 260 per stock one time. And there was a Citron research report, and they exposed their backdoor business practices. Eventually, the stock lost much of its value. I mean, right now, I don't know, it's trading probably like $8, I think, or they changed their name to Bosch and Health. Yeah. And also, like, actually, I still have to focus on some macroeconomic indicators, inflation reports, jobless claims, interest rate decisions, etc. But again, actually, those are all kind of like every trader will be watching, and it will be all over the news. And also, they have specific schedules. Obviously, you can definitely keep track of things. Caveats, yeah, everything comes with a caveat. You have to be a little bit faster. The trend could reverse, and if you are waiting too long and going out of your like rules, there is a high potential the market will reverse and you will start losing money. Well, with SPY, there is still time. You can recover stuff, but you have to wait a few more days or weeks, which I try to avoid. So this is pretty much I'm talking about intraday day trading strategy. So discipline is important. It is not a quick rich scheme, slow and steady accumulation. So I want to tell you that. Again, one day the market goes totally south and your strategy will definitely be tested. If you make a wrong call, I think actually many people, all the trading gurus actually on the internet will tell you the same thing. Cut your losses, shut down the computer and start next day, period. A few more things to consider. I usually select an option contract that is like 45 to 60 days for expiry. As I said, actually, if things go south, you may have some opportunity to recover the costs, like if you wait it out. So I try to like have that. Select an option contract whose delta value is at least 0.5. If you have more, that's great. And people who doesn't know actually what that delta really means, and I have another video in my channel that talks about option Greeks and the impact on stock pricing with a lot of examples. Definitely, please feel free to go and watch that. And if you want to improve the odds, I think actually that is with every trading side, whether stocks or this particular strategy, any strategy. Research on support and resistance levels, so that it's like if things going down, you want to enter, but you don't know how low it can go. Okay, the support levels will give you an idea. There is a higher chance on the day, if it is going down, your support is kind of really close. Higher chances it will go to the support and bounce off. And if you go and buy at that support level, obviously, your odds are improving. The same thing with resistance. Sometimes if it's going up, you may want to sell it, but actually, if you think actually you know your resistance level somewhat, there is a higher chances it will go and hit resistance, so you'll make more money. But again, if you stick to 0.5 delta, and you'll still make consistent money for sure. Yeah. Next, let me walk you through the trading chart setup, how I do it. It will give you a little bit more clarity. Just give you a primer. I use VWAP and RSI. Those are the two technical indicators I use. The next few slides will tell you how I do that. Okay. Okay. Let's look at actually like the trading setup. Go to tradingview.com and you search for SPY ETF. It's good. Then I usually use like 1 minute chart. Then select regular trading hours. And I'm going to go and add two indicators. One is like VWAP, volume weighted average price. The next one is relative strength indicator. Setup is like this. Well, if you want, you can always like go and customize your VWAP a little bit, just to give some visual indications. This is a VWAP line. I'm going to make it black. Then upper bond, let me make it like dark blue, and the lower bond is, let's leave it red, kind of. Okay, hit OK. So you have this setup. So here is the I labeled a lot of things actually on this so that I can explain it a little better. So as I said, actually we are looking at oversold conditions and try to sell it overbought conditions. That's one strategy, and another one is buy it at the oversold condition and try to sell it anywhere along this line, like the lower band or middle band or upper band of like the VWAP. Because like if you look at the other part of the chart, like the other day it came down like oversold, but it took a long time to go to that overbought conditions. It kind of barely touched it. You can wait it, it's okay. But the thing is, but if you want to be like absolutely sure of like logging your profits, you can just like sell actually any of these points, provided actually it meet your target, maybe 50 cents or 75 cents, whatever. You can like sell it in between too. So it's totally your thing. So basically you look for the RSI well below 30 oversold conditions, so possible entry point. So the corresponding price is like it was looking at 594.52 on that day. So you can like select the corresponding option price from your trading platform. Just then it's like you wait for $1 move, or it's like you wait for that to move to the bottom line of VWAP band. So this is a possible sell point. It kind of like moved almost like how much I say, like $1.3. So if your delta is like 0.5, at least you will get quite a bit of like 0.5 or 0.65 per contract. This is kind of a calculation. 595, then 594.52. Total move is 1.31, and multiplied by 0.5 will give you 0.65. It's not an exact number because like option prices depends on like a lot of other factors. Like one is delta and like a lot of other vega, gamma, and like implied volatility. So things like that. So as I previously mentioned, if you want to know about the option Greeks and how they impact the price of the options contract, please go on watch the other video. I have it on my the channel. So if you sell it the first point, you made that 0.65 approximately. If you wait it out a little bit, you would have made like 1.33 per contract. And if you are waiting like overbought conditions, so actually you would have made approximately like $1.91 per contract. So but like the risk is going up at each point. So it's totally your risk tolerance. And also, as I previously mentioned, you will have opportunities. If you look at the next day, it came to like oversold conditions around like 595, and the VWAP middle point is 596, which is like almost $1.75. So you definitely would have made good money there. And if you'd waited out like the oversold conditions, this one, you made like definitely like little higher money. So yeah, 598. So it's $3, $4 move. So yeah, that's a basic setup. So maybe actually I picked, people may think, oh, I picked a perfect day. So I'm picking another day, just like give you how it works. Let's assume that is like December 14th, like the oversold conditions, you kind of like buy it here, 595. So if you wait it out, so you would have sold it somewhere here, which is still give you how much? 595.89, 596. So it's $1 move. Maybe like you are eyeballing things. Again, usually you wait for the next one here. This so kind of oversold condition 595, and you are kind of like, yeah, it never went to like oversold, overbought condition. So, but if you had just like chosen to a little risky strategy, 596.45, it still made almost $1 move. But the market was going down, so obviously if you had gone and bought here, which is corresponding to the oversold conditions, 593.85, and you wait for the $1 move, yeah, 593, 595, yeah, you almost made $1, more than $1. So you will have opportunities throughout the day. You just have to like look for a perfect opportunity. Again, another oversold condition, and 593, let's assume actually we're going to the middle line. 595, it made more than $1. So as I previously mentioned, sometimes actually if you don't lock in, actually things could go really fast or down with SPY. So from 595 to 593. So you may want to set your stop loss at this point, 594.82. If you want to trade it out because you are waiting for the things to go up there. Or like just like stick to the original strategy, 0.5 delta. That means like $1 move, make $50 per contract and get out. Another little tip, when the market is really strong, sometimes actually things may not come down. Though it shows it is oversold, RSI is like very low, it is still strong price action. So typically I try to avoid going there because I want to see at least somewhere closer here or at least below the middle line. Here actually if you look at a perfect setup on this day, if you want to enter, it's oversold, it's kind of below middle of the day almost, or like almost like close to 3/4 of a day. Higher chances that it will come down maybe here or go up. So it's kind of taking a chance here. Just look at it, 587, and here it was 588. It still made the $1 move, so you got that opportunity. So you just have to look for that opportunities. Sometimes I'll just like go and find this number 586 point and put my I estimate the options price roughly 0.5 cents per dollar and deduct it. Okay, it went to 589 and the VWAP is 586, the lower band, so that means like almost like $3, so it is $1.50. So whatever the options price there, let's say $11, actually I'll put $1.50 down, which is 9.5 I believe, yeah. So I'll put my limit order there and try to hit things. If it hits, obviously it's going to go $1 more, so I'll get my 50 cents. So that's another way to look at things and play with it. It's all again initially when you do it a few times, actually you will get to that. So okay, thanks for watching. If you like the content, please click like, share and subscribe. Thank you.